let's discuss or let's give you a guide to Texas homestead exemption rules. So understand that where you live, these can vary just ever so slightly, but fundamentally, we're going to talk about again the guide to Texas homestead exemption rules. So when you own a home in Texas and you occupy that home, you get to file for what's called a homestead exemption. So what does that mean? It means that you will then save money, lots of money on your property taxes. So the reason being, as a homeowner, and a homeowner who pays property taxes, unless they're exempt, and there are a few exemptions for like disabled person or something of that nature, which I'll put a link somewhere around there to find if you're there. But for the majority of us, we do pay our property taxes and have to pay our property taxes. And what it does is those taxes pay for your city, your school, your county, your hospitals. So that is revenue for the local authorities, for the state, whatever, right? So it pays for everybody to have the revenue to run and operate those things as a government. So that's an income source for the government. Good for them. But the property taxes with a homestead exemption says, hey, I live here, which means I'm going to the store today and I'm going to go spend some money. I'm going to go buy groceries. I'm going to get gas. I'm going to go out to eat. So I am stimulating the local economy. And therefore, I'm paying sales tax and other things that then help the local economy. So for that reason, you get a discount on your property taxes when you file a homestead exemption. So a homestead exemption, it lowers your property tax obligation and it can save you hundreds and potentially even thousands of dollars annually on what you pay in property taxes. So let's talk about who's eligible. A homestead exemption, everybody in Texas is eligible if you live in the home. Now, again, if this is a lake house or an investment property, that does not qualify for a homestead exemption. It's your homestead, it's where you live. So you're absolutely willing or able to have it. You can have one homestead exemption. So if I got a beach house in Florida and I want to put, a homestead exemption on that I don't have the ability to put one on here in Texas because you can have one homestead. You got to live in one place. So the property taxes you would save, it's wonderful. It's awesome. When can you apply? Old school, years ago, you had to wait and could only apply for it at the beginning of the year. That is no longer the case, which is super convenient. So when you buy a home and you move in, you can now file for your homestead exemption throughout the year. But the reality is it's got to be done typically towards the first of the year is when you want to make sure it's done so it gets registered and counted for that year. So in other words, they're not going to prorate if you bought the home from an investor, the county I shouldn't say the county, the taxing authorities, the central appraisal districts, they're not going to sit there and add the homestead and give the whole year a break. So at closing, you'll have a prorated portion between buyer and seller that takes care of that. But you can apply for it. It's free. It does not cost you anything. Some taxing authorities, that's the central appraisal districts, they will require additional paperwork. Some will require like a bill or something like a water bill or some utility bill to show that you actually do live there, that it's in your name. This is to help identify, fraud if somebody says I live there, but it's in the name of a tenant. So they may need that, but it does not cost you anything to do that. To do it, I would visit your central appraisal district website to figure out what they need and how to do it. So whether it's like if you're in Dallas, it's DCAD, Dallas Central Appraisal District, Tarrant County Central Appraisal District. Just Google it, it'll pop up. Travis County in Austin, all the counties, 200 plus of them in Texas, whatever that is, you can get that done. But the example would be like if you got a $300,000 home, and let's say there's a $40,000 tax exemption on that, and it's not off the whole thing, right? It's for certain portions of what they do. And each central appraisal district should, I think, have calculators or an estimate for what you can save. But something like that, you might be able to save a couple $100 a month, like $600-700 a year, if they based on those numbers, that example I just gave you. So it's a cool thing to where, again, it's free. You can get it done. Let's see if you forget to file, like, oh man, I didn't hear about this. And, I didn't realize that last year I lived there and I didn't apply for it. You can go back. I want to say most appraisal districts will allow you to go back 1 year. Some might allow two. I think it's up to 2 years. You can go back and say, hey man, I forgot to do this. Sorry. And they can figure out how to make that work. The delinquency date is, again, taxes in Texas, they come due in October, usually around early to mid-October is when they're due. but they're not considered late until after January 31st. So again, that's a big piece to where it's just make sure, like, if you forget to file or you forgot to do it, like I said, you can go back a year or two, but just make sure that you figure all that out, and that is through your central appraisal districts. So again, it's a one-time thing. Once you put the homestead exemption on the home, you don't need to reapply every year. So I think that's important to note. The homestead exemption also puts limits on how much the value, the taxed value of your home can increase. So that's cool. So for example, if somebody bought a home and it's 300 grand and the property, during COVID or whatever time period, let's say next year's worth 350,000. The good news, the homestead exemption said that there's a cap of 10%. So they won't let you go, or they won't tax you more than, in my example that I just gave, the $300,000 home. They won't tax more than 330,000, 10% increase. They won't, for that year, they won't allow that value to go up more than 10% in terms of taxable value. Now your home is still worth the 350 in this example. Like if it went up in value, sell it, make your money, good for you. But the taxing authorities will put a 10% limit. Now that goes away if you do like improvements, if you put on a second story, or if you upgrade or remodel your house. If the county, or I keep saying county, sorry, the central appraisal district, if they're aware of that, they say, well, hold on, your home's worth the 350 because you just did all this work. And they typically find that through pulling permits. I'm not saying you should not pull permits, do stuff legally and not above board, but that would be an example of why they could increase your value from 300 to 350 if there had been improvements to the property that validate that 350. But if it's for through just pure appreciation, they will put a 10% cap. So again, they're going to need some sort of paperwork. You got to fill out a form, show something which you need, that you live there. You can go back if you haven't done this, go back a year, maybe two, and see if you can figure that out. And ultimately, again, there's a lot of value and reasons to do it. So there's absolutely no downfall to doing this outside of just the little bit of time. Let's call it 15 to 20 minutes. It's going to take you to look up the form, fill it out, and send that information in. So once you have this, again, a separate topic, which we'll put around here, links to it, or it's on the website for sure, mortgagemark.com. How do you challenge the value, the tax valuation? So that's to keep those taxes down. But the homestead exemption, again, it'll help you at least save money on the cap. It's free. And if you have any questions, again, it just varies county by county, area by area. So just look up your central appraisal district, figure out what they need or want. But if you have questions, you're always welcome to reach out to the Mortgage Mark team. And as always, when you think mortgage, think Mark.